Hey everybody, I am a little late on this, but hey, I'm not going to miss it for anything. And this week's housing market update is coming to you from Las Vegas. That's right, I'm in Las Vegas. I had the incredible honor to speak in front of about 800 mortgage originators from all over the country. And let me tell you, there are some amazing originators out there. And I think I held my own, but it was very impressive and I learned so much. And if you're in an industry that has mastermind events and you want to get better, I highly recommend you go, because one of the things I talked about is, hey, the greatest people, Michael Jordan, Tom Brady, they're the greatest in their business. They all have multiple coaches. They went to events like this to make themselves better. And my question to you is, what are you doing to make yourself better? Anyway, want to start off with that. I'm heading home today. I cannot wait to be home. I miss the islands. I miss just being close to the ocean. And man, I will not miss the heat here. I'll tell you that right now. But let's get into the market update. Prices this week, prices are pretty steady. Inventory's up. We'll talk a little bit about that. And rates, man, I tell you what, I like this, and you will too. Rates are down. The headline news this week, inflation is up. We just can't get past the higher inflation. But remember, the news that we get this week, it's all old news, at least when it comes to those reports. But inflation is up. We got new home sales report. Man, new home sales still in a slump. That's no surprise, especially based on the news we got last week with regards to home builder sentiment. Big questions that will save you money. We're going to talk about that as well. And then self-employed borrowers. I get probably one or two self-employed borrowers a month. And they're always curious, and it's not so much that they're curious, they doubt that they can buy. But let me tell you, there are a lot of options if you are self-employed. We'll get into that. And then the big thing is, rates. Rates are down this week. We'll get into that. All right, let's get moving. Personal consumption expenditure report. There are no surprises here. And this is, again, old news for the month of May. And inflation is up. Actually, the headline was up at the highest level it's been in 3 years, up at 4.1%. Core was up about 0.3%, up to 3.4%. But you know what? That's not bad. That's not bad news. And you know what? It didn't impact. Typically, a report like this, man, it's going to have a really big impact on the mortgage rates. Mortgage rates are going to go up. You know what? They didn't go up. And the reason is oil prices have come down. And that basically overrides this old news from May. Again, the old news, this is for the month of May for the PCE. But today, hey, oil prices are down below $70 a barrel. So that's good news. Ooh, let's talk about new home sales. Man, this hurts. All right, we had a drop from 622,000 pace in April down to 580,000 in May. That is the second lowest reading in almost 4 years. The year-over-year drop is 6.8%. Man, not even all of the incentives that the builders are using are helping people to pull the trigger and to buy their home. And you know what? Despite the lower amount of home sales, home prices are up. They're up 2% month over month, up to 425,000. That's pretty good. I tell you, month supply of inventory, that's another big. I don't know if I've ever seen month supply of inventory above 10. But guess what? We went from 9.4 months of supply to 10.3 months in May. And let's face it, new homes are sitting longer. The 496,000 homes for sale, that's a big number. Not where we need. We need 1 million. Builders aren't building enough because remember, builders are in this business to make money. And if they're not going to make money, they're not going to build more homes. And if homes are sitting on the market, they're not building more homes. So expect to see this kind of seesaw or this domino effect go into next month's readings for the home builder sentiment and then again, new home sales. Over the course of my career, I moved probably 12 times. There's one thing that was pretty consistent through almost every move. I wasn't there. And you know what? My wife loved it because all I did was get in the way. But there are some questions that you need to ask your mover. Yes, even if you're in the military and the military is providing the movers, you got to read the fine print and those documents that they send you. But here's some questions that you should ask. One, especially if you are doing this on your own and you're paying this out of your pocket, because ultimately it is your money. What's included in the quote? Are they going to pack? Are they going to load? Are they going to unload? Are they going to charge you for mileage? Are those costs all included? With the military, we take it for granted. They pack everything up and they unload everything. They put things in the cupboards All right, that's part of their deal. But if you're doing this on your own, you got to check that out. Don't take for granted what you got in the military. Are you licensed and insured? You got to ask your movers, are they licensed? Are they insured? Because I tell you what, man, I've seen pictures of cargo ships hitting heavy seas, and you see these Connex boxes flying over the side. And I tell you, we've been pretty lucky with our moves. We didn't have a lot of damage, but I tell you what, it happens, especially my last move in the military. Man, I had a lot of stuff broken. All right. Are they licensed? Are they insured? If they're not, your belongings, they're not protected, and there might be something precious there. How do you handle damages? Again, super important. What's their claims process like? You got to know that. And you know what? Review that stuff. Go on ChatGPT. Review your movers. I think that's super important. We never had ChatGPT. We did have Google towards the end of my career, but ChatGPT is going to really, or Claude, or just any AI LLM is going to help you to figure out how the mover is and what their rankings are. Do you charge extra fees? This is super important. Nothing ever good. Murphy's Law always comes into play, especially when you're doing this on your own. What are the extra fees? If you have a 2-story house, do they charge if you have heavy items? What about long carries if they're holding your goods for a longer period of time? What about last minute changes? Say your move-in date gets delayed. Do they charge you? All right, some will charge you a lot. You got to know that ahead of time. You don't want to wait and then you get this big bill. Man, that's no fun. That's no bueno, and it's very expensive. And then what's your cancellation policy? All right, understand the timelines and the associated fees with that. Let me tell you, asking these questions will save you a lot of headache, will save you a lot of time, will save you a lot of money. Let's get an FAQ Friday. I get a lot of self-employed buyers. All right, self-employed buyers, they don't have W-2 income. Typically, it's 1099. It's a little more difficult. And if you're self-employed, typically you're using the tax rules to your advantage, so you don't pay as much taxes, which makes it very difficult to show income, the income needed to buy a home. But there are a lot of different ways as a lender that I can help you, and I don't even look at your taxes. I look at your bank statements. I look at the assets that you already own. There's a lot of different ways that we can utilize your income through your business to help you buy a home. Don't think for a second, because one lender told you no, that is the final answer. You got to work with the right lender who has the right programs to help you buy the home of your dreams. And again, I see this all the time. I do this myself. I have a small business and I write a lot of stuff, and that reduces my reported income. Again, getting ahead of this, not thinking that you're out of luck, getting ahead of this will help you buy a home. And there are, like I said, there are a lot of different loan options. And if you want to know, can you buy a home and you're self-employed? You know what? Give me a call. Shoot me a text. I would love to help you buy a home. Because you know what? I know rates are high, but you know what that rate on rent is? It's 100%. And you're paying it every single month that you rent. All right, let's end this one now. We are at the lowest mortgage rates since mid-May. Conventional, it's still pretty high though, 6.5 to 6.7% are rates. They're kind of general rates around the nation. VA, man, we're getting closer to 6%. We're around 6.12, 6.15%. That's some good news. And you can see that interest rates came down a lot this week, from over 6.2 down to below 6.2. And the reason for this, lower oil prices. That's right, near $100 a barrel last week, now under $7 a barrel. That's big news. And you know what? Despite a ship being attacked in the Strait of Hormuz, yes, there's peace is a very volatile word. And but despite that attack, interest rates today are still a little lower than they were yesterday. So that's good news. And the higher, again, as I said before, the higher PCE report did not negatively impact mortgage rates because, hey, that news is a month old. Those gas prices, those oil prices, those are today, baby. And you know what? That's what is carrying the news today. And here's another thing that is impacting rates. Fed Chair's new benchmark probably is not the PCE, but it is the Dallas Trimmed Mean of the PCE, which basically strips out 31% at the top, 24% on the bottom, and it gives you the middle area. And that showed, and what that does is that kind of removes some of the volatility of oil prices, which causes big peaks and valleys. That shows inflation at 2.4%. Now it's up from 2.3% last month, but that is a lot closer to the 2% that we want. Again, our PCE inflation is the highest level in 3 years, but the Dallas Trim Mean at 2.4%, hey, that's a lot better. You know what? You know who likes that? Fed Chair Warsh likes that. You know who else likes that? President Trump. You know what else likes that? VA and all mortgage rates. The 10-year Treasury is down below 4.4%. So that's very good news. And you know what else came out this week that was encouraging for rates? Hey, the different Fed presidents are really supporting the new Fed chair. They like what he's doing. They like that he's being more transparent, but he's also trying to show less impact by what the Fed says, more impact by what the market is doing, what the economy is showing for the different readings. So really, that's a really good week for rates this week. And you know what? Next week is jobs week. Man, the cycle continues. Will job growth continue to push unemployment down? We did have continuing claims. They popped up about 20,000 this week to almost 1.82 million continuing claims. Will we see that in the numbers next week with jobs week? Next week, the whole week, jobs week. Hey, that's all I got for you guys this week. Y'all have a great weekend. Aloha. I can't wait to get back to the island.